hold you accountable. Now that we've gotten that out of the way, let me move on to my questions. As you know, the chairman of the Federal Reserve, Jerome Powell, said, quote, custody assets are off balance sheet, always have been, end quote. Congressman Barr asked you this morning about whether you conferred with the prudential regulators before issuing SAB 121. You said that you, quote, consulted with bank regulators subsequently, end quote. Can you clarify what that means? Does that mean you issued SAB 121 without consulting with any of the banking regulators beforehand? That is a yes or no question.
Sir, I'm going to try to address your question. Putting crypto assets off balance sheet is also a recipe for further risk in the system and disaster for the system. And what our
I'm going to repeat my question, Mr. Gensler. Did you consult with federal prudential regulators before issuing Staff Accounting Bulletin 121? That is a yes or no question.
And under the authorities Congress gave us, our chief accountant is the chief accountant to look at what public companies' questions are, and they consulted with Big Four, they consulted internally, and put out that Staff Accounting Bulletin.
What feedback did you receive from the prudential regulators after issuing SAB 121? Did they identify any conflict between SAB 121 and prudential regulations?
Just as this happened in the past, they have their own authorities to take up what regulatory actions they would take, but we address just public company accounting. And today in the US, there's no good regime. Once you take a crypto asset, a company, if you go into bankruptcy, there's no segregation. And until that's resolved and protected, that's very different than taking custody of equities, taking custody of fixed income.
So publicly traded banks effectively would have to follow SAB 121.
That is correct.
And you recognize what a huge difference that is from prudential federal regulators, you know, with a family-owned bank. There's quite a difference. Do you think that's fair?
If you want to raise money in the U.S. public markets, that you have to follow accounting standards that properly account for your liabilities. And, sir, crypto assets.
What about what Mr. Powell said? He clearly said just the opposite from what you're arguing.
I'm going to stay in our lane, and our lane is Congress gave one agency oversight of public company accounting, and that's the Securities and Exchange Commission.
My time has expired. The gentleman from New York, Mr. Lawler, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Gensler, how much money has the SEC spent to analyze the impact of climate change on capital markets since you took over?
Sir, we have about a $2+ billion budget, and part of that is our economics unit of about 160 people. But our remit is just about the disclosure regime. It's not, if I understand your question, about climate risk. We're not a climate risk regulator. We're a disclosure regulator and a capital markets regulator.
Okay, so how much money have you spent doing that function?
Our oversight of the capital markets, $2+ billion a year.
Okay. Is it your view that the SEC should be guiding companies and investors in the type of investments they are making?
As mandated by Congress, we're merit neutral. Investors get to decide which investments they take, but it's based on full, fair, truthful disclosure. So that's our remit.
So investors get to decide, but you believe ESG should be a component of that decision-making process?
Well, what we know today is that hundreds of companies are making disclosures with regard to climate risk, and investors across the spectrum, from small investors to large, are currently using those climate risk disclosures in their investment decisions.
But do you believe that should be kind of the guiding principle of how people invest?
It's currently happening in the U.S. and around the globe, and so what we have a role then to do is to help bring some consistency and comparability in disclosures that are already happening.
Does the SEC deserve any culpability in the collapse of FTX?
A number of entities in the crypto field are non-compliant with U.S. law as adopted by Congress over the years, and we're going to be a vigorous cop on the beat to
That's
help
not-
bring them into compliance.
Respectfully, that's not what I asked. I said, does the SEC deserve any culpability for the collapse of FTX? Yes or no?
Look, I think that when people are defrauding the public, we go after them, and that's what we've
Sir,
done here
you're not
and
answering my
elsewhere.
question. You're not answering my question. I'm asking you a very simple, straightforward one. Does the SEC deserve any culpability at all?
I understand your question. I'm very proud of the SEC and its staff, and we will continue to pursue.
So you don't believe the SEC deserves any culpability with respect to the collapse of FTX?
We have a whole field in crypto that understands the law, and if they are providing exchange services, broker-dealer services, clearing services of crypto security tokens, they should come into compliance or.
Reclaiming my time, why didn't the SEC take action on FTX's alleged secret lending of at least $4 billion to Alameda Research?
Again, I'm not able to talk about specific companies or investigations, but I will say all of these companies should come into compliance with the law, and until they do, we will continue to pursue as a cop on the beat and investigate and follow the facts and the law. But it takes time to build cases. It takes time to do them thoughtfully and carefully as you'd want us to do.
I would just like you to answer my question, but that's fine. As you've proceeded with such drastic rulemaking at a rapid pace, the SEC's Office of Inspector General raised significant concerns with your short comment periods, limiting the amount of feedback SEC staff receives. Why have you ignored the IG and pushed for shortened comment periods?
We actually have we benefit greatly from comment periods. So on average, we have our rules outstanding for about 70 to 80 days from when we.
I would just remind you, at a Bloomberg conference, you said you don't trust industry participants to provide honest feedback. So do you actually benefit from comment periods or no?
Yes, we very much benefit.
So you take back your comments where you said you don't trust their feedback?
The feedback that we get is helpful, and it's part of a robust input from the
So you do
public.
trust their feedback?
Look,
Your quote was, you don't trust industry participants to provide honest feedback. Do you or don't you?
we rely on that feedback as part of our ongoing engagement.
The gentleman's
with
time
the
has
public.
expired.
Your obfuscation is amazing. Congratulations.
The gentleman from Iowa, Mr. Nunn, is now recognized for 5 minutes.
Thank you, Mr. Chair. Thank you, Chair, for joining us today. In my state of Iowa, we have over 400 insurance companies, many of them very small, but they invest over $66 billion in our local economy. When I was on the Financial Service Roundtable last week in my hometown of Des Moines, we had everyone around the room really focusing on the severe impacts of your agency's intentional or unintentional, but I'd like to get to the bottom of this, hard close and swing price proposal on Main Street retail investors. Now, just earlier today, you highlighted the fact that, this plan would favor small businesses. But honestly, I don't know that they feel the same way. I'm very concerned about swing pricing and hard close proposals that have drawn strong opposition from both industry and consumer advocates, with most recently the Consumer Federation of America arguing it would basically create a two-tier market here that would benefit sophisticated investors at the expense of Main Street guys back in my hometown of Des Moines. The rule would limit access to trading and impose additional costs on hardworking Americans' 401k plans, our nurses with 457 plans, teachers with 403b plans. In fact, your proposal acknowledges that these middle-class investors may lose their ability to manage their investment through the close of the stock market at each day. So, Mr. Chair, my first question to you is, do you believe the 401k saver should have access to current pricing of mutual funds they are buying or selling?
I think that 401k, as well as many other retirement plans, benefit from this
Absolutely
collective
agree with you,
investment vehicles.
Yes. So in other words, the pricing of a security is a crucial factor that savers should consider when making this investment decision, correct?
If I understand your question, yes.
Good. Then why is the SEC effectively picking a winner model and a loser model?
We're trying to address a systemic risk that exists in our capital markets right now, that in times of stress, the open-end bond fund community has come and called upon the Federal Reserve for assistance. And so it's really a matter of how wide is our, if you call it, public safety net. And I know that my dad, if he was in trouble when he had a small business, he wouldn't have had the U.S. government help bail him out.
That's
And
right.
We're trying to lower that risk in these bond funds.
Well, so I want to get into the details here then, because mandating a hard close for mutual funds, this is not a new idea. And in fact, it was proposed over 20 years ago, back when I still had all brown hair and was working for then financial chairman, Senator Chuck Grassley across the aisle. A good man from Iowa who recognized this, and I believe talked with your predecessor about how dangerous this could be. In fact, in 2004, he proclaimed that hard closes will be the end of same-day execution of trades for many retirement plan investors. So, Mr. Chair, it's my understanding that swing prices currently as an option for funds used today, isn't it true that no funds have utilized swing pricing since the SEC's authorization in 2016?
Well, I'd have to get back to you. I think it's had limited use at most.
The answer is no. If no funds have found it worthy, why would the SEC mandate it?
It's really to address the systemic risk issues, and a voluntary system to do something to protect the overall system sometimes doesn't work as well as when you actually have to.
So, Mr. Chair, I believe that's your perspective, but we have had so many folks who have told us the direct opposite, and I hope that you would be open to hearing them. I know that you're providing that feedback comment, but overwhelmingly, it seems like this is falling, for many of my folks, on deaf ears. So I want to say, what makes you believe the retail investor would not face the same negative impacts and burdens now based on the decision that you're proposing going forward?
It's really a risk trade-off, but right now the American public is holding this stress risk that our Federal Reserve might need to help support this overall collective investment vehicles, and we're trying to address that through these rule proposals. But again, the public feedback is helpful.
So I would offer that you're taking a long vision of something that we have very little feedback on. Isn't it true that you have proposed roughly 50 rules since the spring of 2001?
In the last 2 years, 46 rules.
All right, very, very nice. I think you're working your way very quickly to 50. Has SEC done a cost-benefit analysis that impact the aggregate of these rules?
We do cost economic analysis on each and every one of them, and sometimes the subcomponents on each and every one
So,
of them.
Mr. Chair, as we move forward on this, my aim, and I think many in this room, is to help the mid and low-level investor be successful, not just in their retirement, but their future going forward. I hope you'll be open to listening to them. I yield back my time, Mr. Chair.
The gentleman's time's expired. The gentlewoman from Texas, Mrs. De La Cruz, is now recognized for 5 minutes.
Thank you, Mr. Chairman, for holding this important hearing today and allowing Congress to administer its critical oversight duties. And thank you to the witness, Chairman Gensler, for taking the time to appear before Congress today. Now, given the SEC's primary mission to protect investors, maintain fair and efficient markets, and facilitate capital formation, do you believe it is appropriate to prioritize environmental, social, and governance issues?
We prioritize investors and issuers alike, and as I said earlier, we're merit neutral, but we do have a proposal to help bring consistency around climate risk disclosures, because markets are investing and relying on disclosures around climate risk.
Well, and I think that would be a matter of opinion there. The breadth of your climate proposal implies a nearly limitless understanding of the Commission's authority, and that's a real concern today. That is contrary to the text, the context, and history of the Securities Act and Exchange Act. Now, Congress has dictated that disclosure rules must focus on investors as as investors focused on financial returns, not investors that have other objectives or motivating resources. Can you explain how carbon emissions disclosure is related to financial returns to all public companies, including companies that have determined it is not material for the purpose of their financial filings?
Investors today receive climate risk disclosures from hundreds of companies, including greenhouse gas emissions, as you noted. And those investors want to compare and contrast those different companies and make sure that there's some consistency of those disclosures. And it's really the investors that are saying it's material to them to understand those disclosures.
So let's talk about that. Congressman Barr gave valuable insight as to the United States' strength in private capital. He stated that 50% of the world's private capital comes from the United States, while only 20% comes from the EU. With your current rule in place, it seems that your philosophy is moving away from the strength of our United States capital market and closer to a European system, which is contra to your own comments indicating our unique market strength. That being said, are you in favor of a EU regulatory regime?
We have different laws, we have different capital markets than Europe, and we at the SEC live within the authorities we have here, and I think we benefit from robust public markets and private markets here in the U.S.
Now, during this hearing, and you talked about the private investor and their importance in this process and hearing their voice. During this hearing, you said there were 1,500 letters receiving support for your climate disclosure rule. With millions of retail investors in our country, 1,500 is a very small number. Now, nonetheless, of the 1,500, how many of those came from small business owners or individuals?
We'd have to get back to you. It's actually 15,000 comments that we have, but
15,000.
I would be glad to have staff to try to get back to you on that.
That would be important because, as my colleague, Mr. Lawler, brought out a statement that you said at a Bloomberg conference earlier this year, that you don't trust industry participants to provide honest feedback, but you're talking about these 15,000 letters that you received that were giving support to this climate disclosure. Now, before taking a role as a congresswoman, I was a small business owner, an individual retail investor, saving my hard-earned money into a market with the goal of maximizing my dollar for ultimately retirement. And I think that's what the everyday American is doing on Main Street America. And I think that most people would agree that they want their dollar to grow for retirement and not to be impacted by partisan policy such as ESG that would ultimately negatively impact their retirement. With that,
The gentlewoman's time has expired.
Mr. Chairman, I yield back.
The gentlewoman from Indiana, Mrs. Hochin, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you, Chair Gensler, for your testimony here today. Chairman Gensler, many times before Congress, most recently in September of 2022, you stated your belief that the vast majority of digital assets are securities. Yet in February 2023, you stated everything other than Bitcoin is a security. In March of 2023, in a March of 2023 op-ed, you changed your tune slightly and asserted that most digital assets are securities. If your own view has continually evolved on these statements, how can you assert that the law is clear on the issue if you yourself have vacillated on it?
I actually think I've been consistent. Sometimes reporters report the same conversation differently, but let me state it here. Most of these have a group of entrepreneurs in the middle, and the public is relying on their efforts. There's
Okay.
a website, there's a Twitter account, there's
So I want
they're
to,
relying
I
on.
want to reclaim my time. So earlier in the hearing, you stated that your agenda at the SEC is to ensure we have the best capital markets for years to come. In an ecosystem as borderless as the digital asset industry is, competition between countries to attract and retain retail investors is critical. A key factor in this competition is whether the country has a clear regulatory framework, which the United States currently does not have. The European Union just provided this clear regulatory framework through its markets and crypto assets regulation. And we're already seeing digital asset firms move jobs and capital to European jurisdictions as a result. Have you considered the impact that the policies you've furthered as chairman of the SEC will have on digital asset firms leaving the United States? If so, what's your assessment of that impact? Does it align with your statutory duty to facilitate capital formation in the United States?
It's, our duties is to protect the investors and the issuers to access the capital market. And if there's so much non-compliance, then people will have lower trust in our capital markets, could hurt the rest of our capital markets.
If,
That's
Chairman
what we're
Gensler,
focused on.
if you're regulating by enforcement action versus having a clear regulatory framework, I'm not sure how there can be the certainty
If I could say,
necessary.
we have a clear regulatory framework built up over 90 years. It's just a bunch of intermediaries in this market that think they have a choice. They don't have a choice. They're non-compliant generally, and they need to come into compliance.
Given that your own statements have vacillated, Chairman Gensler, I think it's clear that the lack of clarity on this issue hasn't done anything to help this industry thrive in the United States. There's a constant threat of regulation through enforcement by your agency, and that has driven innovators and those who want to play by the rules elsewhere. Switching gears to capital formation, Chairman Gensler, what specific steps is the SEC taking to promote capital formation in light of the decline in public companies' slow IPO activity? How is the Commission balancing the implementation of so many costly regulatory disclosure requirements with its statutory obligation to facilitate capital formation?
In every proposal that we make, any adoption we make, we look at the effect on capital formation. It's a key part of what we do, but we're trying to drive greater efficiency in the middle of the markets.
Chairman Gensler, why was the industry not allowed to collaborate on many of the proposals before they were published, including a proposal on equity market structure? The comment files for the equity market structure proposals are overflowing with letters from financial services firms representing the interests of hundreds of millions of retail investors. These letters raise serious concern about the impact of the contemplated changes will have. In light of all these alarm bells, don't you agree that a better approach would be for the SEC to withdraw the proposals and take its time to conduct a holistic review, gather input from financial services firms, and study the market structure rather than proceeding recklessly with an untested experiment that risks harms to the markets of everyday retail investors?
With all respect, I'm very proud of what we put out. We built upon years of experience. It's been 17 years since we updated some of these foundational rules about our equity markets. And we met with a lot of people in the markets before the rules were made.
Can you assure us today that the equity market structure proposals will not result in increased commission costs, delayed execution, less favorable terms, and other harmful items to retail investors?
Again, they're out for public comment, but the goal is to drive greater efficiency, so that would be lower costs.
The gentlewoman's time has expired.
Thank you. I yield back.
The gentleman from Tennessee, Mr. Ogles, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Chair Gensler, I want to follow up on Chairman Huizinga's last question that was regarding SBF, the Justice Department. He was talking about the memo, the request, about any communication between the Justice Department and your agency. Is it fair to assume that you were about to say that the Department of Justice is responsible or implicated in the production of that document regarding the charges to SBF?
No, let me say two things. One, it's really important to protect investigative files because there are things in investigative files that are private, and we put out then in a charging document for a court to review and the public to review the important information about those charges. But an investigative file is important to keep confidential. Number two, the Justice Department conducts parallel investigations, and that's a separate matter as to whatever they do.
So a memo was requested. There should be an internal document from your agency. You and your agency report to this committee, so you should be able to produce that document.
Again, sir, I have deep belief in and respect for congressional oversight, but we're working with the committee staff here, we're working with the members that you met to try to address their issues. We've met, the staffs have met, have continued to brief as to how we deliberate and how we approach enforcement matters. But it's also a really important
Well,
thing
I'll
that we
reclaim my
protect
time.
investigative files.
You know, we have a Homeland Security agency that gets secret documents to the committee. They can be reviewed in the SCIF. There can be a process here by which you oblige this committee and produce the documents that have been requested. It's that simple. If I wanted to hear preaching, I'd go to church. You were asked a question. A document was requested. You have an obligation to produce it. Now, if we need to take extraordinary measures to protect the information within that document, it can be done so. But please spare me the preaching. Chairman McHenry, Huizenga, both mentioned your responses have been inadequate. Your staff have relayed to committee that you have 4 full-time employees in the Office of General Counsel and working with one IT staffer to address the concerns of Congress and committee. Given the size of your budget, do you plan to continue inadequate resources to respond to this committee?
Again, I know that our staffs have been meeting and discussing and trying to work together to get to your goals and what we believe in that oversight. We've actually added some resources. These are very broad requests, these 2 requests that you just referenced.
I understand, but clearly there's some additional scrutiny. Clearly there's need for more personnel. So you're either intentionally obstructing or you're not just a good manager, all right? No offense. As we move forward, when you look at the uncertainties in the marketplace, well-educated, recessionary pressures, inflationary pressures, this committee has questions. Unfortunately, you are unable or unwilling to provide the appropriate answers. That bothers me. That concerns me. You know, I go back to the Securities Act of 33 and 34. The trifecta of the directive for your agency is 1, to protect investors, 2, maintain fair and orderly, efficient markets, and 3, facilitate capital formation. That seems pretty clear. And yet with ESG, you've delved into this realm of environmental regulatory regime. Is the SEC widely known for its expertise in science?
We're a capital markets regulator. We're merit neutral. We don't make, and we're not through this rulemaking addressing climate policy.
Well, to be clear, no one's looking for the SEC for scientific guidance. And when you look at your rule and the request for, Mr. Chairman, I will yield back. I'm out of time. Thank you.
Gentleman's time has expired. The gentleman from South Carolina, Mr. Norman, is now recognized for 5 minutes.
Thank you, Mr. Ginsburg. Thank you for coming. I think you've heard a lot of frustration with you about your response time, about getting back with the committee, about your passing regulations and not giving enough time. To not get letters back, you've got 4,500 staff members. You've got 6 divisions. You've got 25 offices located in D.C. And to not respond, even if it's complicated and broad, like you said, you need to at least respond with something. That hasn't happened. I hope you will take note of the frustration that so many members have had and outside of this chamber have had specifically on the job that you're doing and the non-response. PMIs, I'm in the real estate business. The houses that we sell, your buyers have to get the PMI insurance. Mortgage insurance linked notes, I think you understand. Can you give me a yes or no? Will you ensure that private mortgage insurers can continue to utilize the capital markets for the MILN's transactions, which are recognized by state regulators, recognized by the FHFA, the GSEs, and are important tools in the housing market today? Yes or no, sir? It's very easy. I only have 5 minutes. Just yes or no. Will
No,
you,
I understand,
will you
but
ensure that you will utilize the capital, allow this to happen with the MLFs?
I
Okay,
believe you're
would you just get back with me on that? Do you understand the major questions doctrine?
I understand that the Supreme Court last year articulated a doctrine that in essence had existed, but articulated it in a case last year.
It's basically a common sense statutory interpretation. And it has to do with the agency's rulemaking authority. It's not unlimited. You just can't go out willy-nilly and pass regulations without getting congressional approval. Do you agree with that?
We live within the authorities granted by Congress. They're not unlimited. I agree with that. And we live within how the courts interpret our authorities.
Then why on March 21st, 2022, your agency proposed a 500-page climate disclosure rule that would replace the voluntarily sustainability reports with mandatory disclosures? The dollars this cost, hundreds of millions, does that not fall under what we were just talking about?
I think that it's within our authorities, that our existing authorities, very clearly that many companies, hundreds, are currently making these
So you're just gonna do it?
disclosures. And to bring some consistency to those disclosures.
But you're just gonna do it
already
without
being made.
bringing it before Congress? You just intend on doing that? I get that. What's your opinion of the Clayton era proposals that you eliminated?
I have great respect for Chair Clayton, but which proposal, sir, are you referencing?
The one I'm talking about is the rulemakings where you have an appropriate cost-benefit analysis before you put your rules into effect.
We're using the same guidance from 2012 that I think predated Chair Clayton. It's internal guidance about how we do cost-benefit analysis, and we're using the same approaches that I believe.
But you pretty much did away with it, didn't you? You're not getting a cost-benefit analysis before your proposals are put into place.
Sir, with all respect, we actually are. We put out cost-benefit analysis in our proposals and all of our final rules. We take public comment, we update them, we adjust rules.
Here's what I would ask you to at least consider. You've put up in the last 24 months 53 rule proposals. Your previous heads of the SEC for 24 months, Ms. White did 23, Mr. Clayton 26, and 20% less time for input from those that are paying your salary and are paying trying to run institutions. 60 days on public comments on some of these bills some of the rulings was just not enough time. But you're on record as saying you basically don't value those that much.
I'm on record saying I do value.
You do value it? Okay. You know, for every dollar that is spent, whether it's environmental regulations that you're just putting on the businesses that are trying to survive, the lack of input, theoretically, I think you believe that more than you do your real life examples that these institutions are going under, and I hope you take this to heart. I yield back.
Gentleman yields back. We'll now go to the gentleman from Florida, Mr. Donald, for
Thank you,
5 minutes.
Oh, sorry, Mr. Chairman. Thank you, Mr. Chairman, Chairman Gensler. Last but not least, why don't we just get to it? The commission has been extremely active on the rulemaking front during your tenure at the agency's helm. Dozens of rules proposed and issued, many overlapping in scope and topic. Many of the new rule proposals also relate to security-based swap markets and may duplicate the requirements only recently implemented. Have you considered the impacts of proposing new and additional regulatory burdens on this market when the full effects of Title VII rules are still unknown? And secondarily, just as important, have you done a fulsome analysis on the impact of the rules market specifically as they relate to market liquidity?
With regard to the securities-based swap market, I think it's 3 different rule proposals, and each of them, we have done full economic analyses, which is put out to the public comment, and that's related to the swap execution facilities in the swaps markets, relates to large trader reporting as a separate rule proposal, and thirdly, we made a proposal around anti-manipulation in the markets. A number of these are actually required by Congress, the swap execution facilities, for sure.
Well, while we're on the position of rules, let me answer this question. It's actually a follow-up from my colleague, Mr. Norman. Your climate disclosure rule, 500 pages, you say that that's the way we can have uniformity in disclosure, but what provision are you using to create authority for a large climate disclosure when Congress never gave you one?
Congress did give us authority around disclosures in both of our first acts, 1933 Act and 1934 Act.
Chairman Gensler, can you honestly sit there and tell me that in 1933 and 1934, Congress actually anticipated climate disclosure rules?
They didn't anticipate many things. It was 90 years ago, but what they did anticipate is that companies needed to be truthful in their disclosures and
Truthful in their disclosures around their financial practices, around assets, liabilities, earnings per share, return on equity, and I can go on and on and on. But potential climate risks, Congress never anticipated that, never.
No, it's broader than that, sir, because it's also companies today are already making significant disclosures about climate risk.
But if they do that of their own volition, that doesn't give you the authority to make everybody do it. Just because some are doing it doesn't mean you have to make sure everybody does it.
We, with all respect,
Chairman Glenser, do you disclose how many blue shirts you own? Should we be able to pass a law that makes everybody disclose how many blue shirts they own?
companies that are in the business of raising money from the public are supposed to
Chairman
make
Gensler, every publicly traded
disclosures.
company raises money. Every one of them does it. That's why they're in the public markets.
Right.
But that doesn't mean that you get to arbitrarily create some rule out of thin air that we never granted you to then make them regulate on climate emissions. We never did that.
They are already making disclosures, and it's bringing.
Yeah, but you don't have the authority to make it uniform because we never gave you the authority. You are making a determination and a definition without congressional authority. Yes or no?
We do have authority, sir.
You're making a determination and a definition without congressional authority.
The authority.
Yes or no?
It's the same authorities that
Yes
we
or no?
used to, with all respect, sir, it's the same authorities that we used when we said you had to disclose material risk, where you have to disclose management discussion and analysis.
But material risk and management discussion goes to the actual operations of the business itself. What you're talking about is something dealing with the outside aspects associated with the business. I'm gonna reclaim my time and move on to something else. You said earlier in another line of questioning that the players in the digital asset space don't have a choice, that they have to comply with the rules. But once again, Congress has never given you a framework for regulating digital assets. Where are you pulling that one from?
With all respect, sir, we disagree on this.
Oh, I can see we disagree a lot, Chairman, because we're not giving you authority, you're just taking it. I think that's part of the issue right now.
With all respect, Congress painted with a broad brush when they set up the SEC, and I quote Thurgood Marshall, which is one of the greatest.
Congress painted with a broad brush in 1933 and 1934, not in 2023. We've not touched that. It's a new industry. One last quick question, because I'm concerned about your agency. You have some of the highest turnover amongst the agencies. Do you think you have the manpower to actually regulate digital assets, considering all the other rulemaking you're engaged in?
We actually have 6 to 7% turnover, which is consistent with the other federal financial.
I would disagree.
regulators.
OPM would say otherwise, Chairman Gensler. Hey, real quick, last question. I think it might have came up. You were Hillary Clinton's CFO in the campaign, right?
It's part of my history.
Were you? Yes or no?
In 2016.
Did you facilitate the payment for the Steele dossier since you were CFO of the Hillary Clinton campaign?
Sir,
Yes or no?
sir,
Yes or no?
that was, That was not.
You're under oath, Chairman Gensler, yes or
I
no?
know. It was not something I was aware of.
I yield back the rest of my time. Thank you, Chairman.
Gentleman's time has expired. I would like to thank the witness. It is late in the day, and he's been willing to take members' questions. And as I've told the chair privately, we may disagree on actions and matters of policy, but I thank you for your willingness to engage in this forum. That is meaningful and is noteworthy, and I very much appreciate it. In written form, when we request documents, we'd like to have that same level of compliance and interest in complying as your physical presence and willingness to answer questions. So with that, I'd like to thank the chair, Chair Gensler, for his testimony today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witness to the chair, which will be forwarded to the witness for his response. I ask you, Chair Gensler, to please respond as promptly as you're able. This hearing is adjourned.